Today we'll be looking at second order effects, especially as it relates to cryptocurrencies. One way of looking at this is selling shovels in a gold rush. The people who really made money in the gold rush weren't the gold miners. Those guys were taking a really big risk, but the guys who sold them useful things like shovels and jeans and things like that. And the reason for that is anyone can see a headline in the New York Times and see there's a lot of gold in California and rush to California. That's pretty obvious. But it takes someone a lot smarter to look at the second order effects. What do those people who will be following that trend want to do? And those are the guys who really made money. So successful people consider not only the trends, but what the trends cause. The second order effects often dwarf the original trend, which is why we'll be looking at this, because what we're looking at for Bitcoin and crypto, it could be a whole lot bigger than what it first appears. It's like an iceberg. There's a little bit sticking above the surface, but below the surface there's all kinds of things going on. So let's look at a few examples. Second order effects of the subprime mortgage crisis were an order of magnitude greater than the original losses. So I looked this up it was from Wikipedia. $1 trillion in bad mortgages caused 3.8 trillion in losses in the U.S. alone, excluding other areas. So the bad loans were pretty small compared to the total losses. And so if you had a job making cars, you might think, well, I'm going to be fine because I already own my house. I don't have a subprime mortgage. Well, you'd be wrong, because it turns out people weren't able to buy as many cars, so auto companies got in trouble. You might have lost your job. And if you're in real estate, if you're anywhere, if you're selling, consumer electronics, this affected you. The economy dipped by about 40%. I think GDP reduced by 40%. Lots of unemployment. And so the second order effects were much greater. So someone seeing this coming, or that you could have looked to see if this was coming, and started thinking about second order effects. Now, the second order effects of Moore's law have transformed our lives and put many companies out of business. If you're familiar with Moore's law, it's that the number of transistors in computers, i.e. the computational power of computers, doubles every 18 months, and the cost of them halves, which is pretty incredible, and it was predicted in the 1960s, and it's held true until today. And people, every few years, they say Moore's law it's going to slow down, but something new technology always comes up that's able to save it. So they say we're not going to be able to put more transistors on a chip. Well, it turns out now there was dual core, then there's quad core chips, and people say, well, they're eventually it's going to get too hot still. And if you look down the road, there's quantum computing, there's DNA computing, there's all kinds of ways that in the future chips can get even smaller and smaller. So if you're a taxi company or you're an offline retailer, you could have easily predicted that once computers fit into pockets, those services, like taxi companies and Sears, would be replaced by Uber and Amazon.com. Of course, taxi companies didn't do that. Sears didn't do that, and now they're suffering the consequences. It's a very easy thing to plot out. You can see 1960s, computers fit in a room. 1970s, they fit on a desk. 2006, they fit in a pocket. By 2025, they'll fit in a human ear. And you can even pause to think, what would the second order effects of this be? How will that affect people who make screens for phones? There's not much need for a screen if it fits in your ear, right? It's just talking to you and you're talking back to it. How does that affect dating apps? How does that affect security? So there's some companies that'll go out of business and some that'll take advantage of that, and just look at this simple prediction of where it's going. You can also look at a human brain. So probably around 2025, maybe a bit later, for $1,000, a computer can do as many calculations per second as a human brain. What will the effects of that be? We can see it coming, and it's just like right around the bend. And so, is there really any point for humans developing skills that computers will be able to do? If your kids are going into first grade right now, in 20 years, will a CS degree really be that useful? Right? All right. So let's look at second order effects as this relates to cryptocurrency. what businesses will be forced to close, and better yet, what kinds of shovels can we sell to gold miners? I.e., what kinds of things will people who use cryptocurrency need? So we look at the market capitalization of cryptocurrency over the last 4 years. The market capitalization has gone up by 800x, which is insane, from $1 billion to $100 billion. So if you look at just at Bitcoin, the market cap has not as is the growth rate slowed down, but overall for cryptocurrency it hasn't. So Ethereum's growing, Dash is growing, even Litecoin's picking up. And so this is actual data from coinmarketcap.com. So if we just project that out the same way we projected out Moore's law, we can see what's going to happen in the future here. So market capitalization, that's the total value of all cryptocurrency out there. So let's say I've got $1,000 and you've got $1,000. That's $2,000 between us, and then we add up all the cryptocurrency that everyone else in the world has. That's the total market capitalization. So let's look at the market cap of gold. That's all the gold that anyone owns in the world. That's around $9 trillion. So we're looking at 2021 is when cryptocurrency will be worth more than gold and worth more than US dollars. I put in parentheses here M2, so there's different definitions of dollars, of what a dollar is. So it's M2 definition. By 2025, the market cap of crypto will be greater than global market cap of real estate in the world, which is just pretty incredible. So I'm not sure if this is a really accurate representation of what's going to happen, but it seems like it could be pretty likely, and it's definitely going to. Seems like it could happen soon. So we talked that don't put any more money in crypto than you can afford to lose. But conversely, if you don't put in as much as you can afford to lose, you might be screwed otherwise. The price, if cryptocurrency becomes so useful, the price of the dollar could slump. If the price of the dollar slumps, the dollar goes down. With U.S. debt increasing, we'll be able to pay our debts. As we're unable to pay our debts, the price of dollars will keep going down as it becomes less and less valuable. And pretty soon we have a market crash. We have a situation like the Weimar Republic in Germany where people are carrying around so many dollars in a basket just because, like it was like several trillion marks to buy a loaf of bread. One of my teachers in school said their great-grandmother in Germany at the time, she'd taken a basket full of money to the store to buy something, left the basket of money outside. When she came back, the money was there, dumped on the ground, and someone had stolen the basket because the basket was worth more than the money inside. And these are really smart people who caused that crash. And we've got really smart people in the U.S., in the Federal Reserve, and that having smart people is not really enough. So if you don't put money, spread out your risks, it definitely could be a challenge for you. There's a friend of mine, two friends from Russia. One friend's family put their money in dollars, one put it in rubles. Over 10 years, the price of the ruble went way down, and they lost most of their money. Whereas the one who put the money in dollars was fine. They're quite well off now. So, let's consider this. If you're entering college today for a degree in finance focused on fiat currency, that's currencies like euros and dollars and yen, in 4 years, you might have a useless degree and $100,000 in debt because you now got a degree in something that's pretty useless. As 4 years from now, that's 2021. Crypto will be growing so fast at that point, it'll have taken over most of the market. And I'm not a very strong believer in getting college degrees anyway, but unless you're going to be a doctor or something like that. But if you're going to be a lawyer, let's say, you're looking to get into finance or corporate law, maybe it's not really all that interesting to do something that's not crypto related. Even if this trend slows down, let's say you're never going to be at the peak of your game as a finance manager or as a lawyer. Maybe you're 38 years old and you're just going to college now. It's 20 years from now. 20 years from now, the world's going to be crypto. So consider that when you're going to college and how you build your career. So these second order effects could be pretty substantial. On the negative side, on the positive side, though, think of all the things that people need. How can you sell shovels to gold miners? What do these people need? What kind of things are not there? Let's say invoice financing for cryptocurrencies. Does that exist? I kind of doubt. Are there any, if someone wants to buy avocados using Bitcoin, is that available? I don't think so. You can buy electronics. Someone wants to buy shipping with some cryptocurrency. What kind of contracts could be made using Ethereum? There's so many different options. There's the very basic kind of shovel you can sell is selling the hardware wallets. You can imagine, I think 0.5% of the U.S. has Bitcoin wallets at this point. Let's say all of them, they need to get a physical hardware wallet to be secure. That's going to be a massively growing market. I think Coinbase, they just, I don't know how this is possible, but their transaction volume's gone up 40x, and I think they added something like 400 new customer service representatives, and still I can't keep up with demand. So if you just start a Bitcoin exchange at this point, you'll be pretty busy. So I think that wraps up second order effects of cryptocurrency. Look forward to hearing your comments.